Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A bearish closing long black Maribozo yesterday, following on from the previous session's bearish Harami. It set up the conditions for this week to be a weekly key reversal, so if we close tonight either over 104.91 or under 104.58, then we'll be on. Right now we are looking at a weekly key reversal down. The move was also a close back below the well highlighted bright red neckline extension to the very narrow reverse head and shoulders continuation pattern, currently 104.74, from between mid-November to early December 2024. This neckline has acted as an impromptu, somewhat inefficient on occasions, downtrend since December last year. The price drop was stopped dead by the slowly declining green short medium moving average, currently 103.89. Below this we have a congestion at 103.69 and then a congestion band between 103.32 to 103.49, containing the December 2016 low at 103.49 and the January 2017 low at 103.40. Finally, we are still close to making a monthly key reversal for February. However, we still have not managed to make that high over 105.32. That will be a requisite element for making such a pattern. It looks unlikely at the moment. So far today, well, a little lower, below the green short medium moving average, but not managing to stabilize down there. And we're looking like an indecisive doji cross right now. Cable, AK sterling against the US dollar. A bearish engulfing pattern and bearish closing black Maribozo yesterday, which wasn't that hard to do as the previous session was an indecisive spinning top. Prices are once again capped by the twin resistances of the 50% Fibonacci lines of the June 2016 to September 22 move at 126.99 and the October 23 to September 24 move at 127.34. The turn down pushed back below the declining mauve medium moving average, currently 125.57. and back down within the dark blue upper trend line of the mid-January to mid-February ascending wedge pattern. That's currently 124.33 to 126.24. Now for the moment I'll still maintain topside the primary target X at 129.15 and the secondary hard to reach target X1 at 131 even for a breakout of this pattern. So I'm increasingly of the view that this move higher may have been a false break. Meanwhile, below we have the flatlining green short medium moving average, which is currently at 124.69, which is within a newish congestion zone between 125 and even down to 123.55. This zone also contains the dark blue lower trend line of the ascending wedge pattern. Now so far today, a further dip lower, but only as far as the lesser Fibonacci line at 125.69, which is a bit surprising, before a pull back up and looking like an indecisive doji cross right now. Not the pull back up is surprising, but why it stopped at at a lesser Fibonacci line. US dollar against the Japanese yen. A bullish white soldier yesterday, somewhat reactionary, despite the previous session being an indecisive doji cross. Prices bounced up once again from the lesser Fibonacci line at 148.68, closing back up over the 50% Fibonacci line of the July 23 to July 24 move at 149.61. Overhead is the next 50% Fibonacci line of the whole 2024 move at 150.76. As I've mentioned previously, this region was the low back in early December last year and was the only obstacle left from the market forming an early December 2024 to date rounded top pattern. We have now formed that rounded top, but we've chosen for now not to exploit it on the downside. Meanwhile, overhead is the dark blue uptrend, currently at 151.58 of the mid-November 24 to date possible shallow bull channel. Now we are below it, but I have misgivings about this possible bull channel as we haven't touched the channel lines the requisite number of times. So I have not placed any targets below it as yet. It all now depends if prices exploit the rounded top or go on to form yet another pattern, and I have some nascent thoughts about that, which I will reveal in due course. Now so far today, a follow-on higher to yesterday's reactionary move back up, up towards a 50% Fibonacci line at 150.76. US dollar against the CNH, the offshore Chinese yuan. A second bullish white soldier yesterday, this time a bullish long white Mariposa that rose up through a fairly clear area up to the combination of the flatlining green short medium moving average, currently at 729.97, and the bright green upper time, currently also 729.97, of the late December 2024 to late January 2025 bearish Andrews pitchfork, where it was stopped dead. Now further overhead is the July 2024 high at 731.13, and then limited resistance until the congestion band between 734.41 and 734.96. Meanwhile below, we have the influential dark blue upper trend line, currently at 725.5, of the January to March 2024 ascending triangle pattern, and the rising mauve medium moving average. That's currently at 727.68. There is still the possibility to look at the whole late November 2024 to date action as a possible double top, and if it would be that, it would be an even Adam type. Now so far today, a reactionary move back down, capped by the combination of the green short medium moving average and the bright green upper time, possibly the beginnings of a tweezer top. We'll have to wait and see on that one. US dollar against the Brazilian real. A bullish closing white Mariposa yesterday and second bullish white soldier, following on high from the previous session's key reversal up. Prices pushed up over the October 2020 high at 580.70 that had previously capped the market, but did not really try and reach an overhead March 2021 high at 588.04 that had capped the market back in early November and early August last year. The most significant feature of all this move higher is how prices have recently been halted and are now seemingly pushing up and away from the combination of the rising gold long moving average, currently at 569.83, and the bright red breached but seemingly repaired May 24 to date uptrend, currently at 575.48. This combination had been guiding prices higher since the middle of last year. However, at the moment I have still left target X in the 563.35 zone and secondary target X1 down at 541.95 on my daily chart. Now these are the primary and secondary targets for the drop from the large early October 2024 to mid-January 2025 rising expanding wedge pattern. As a final item, it should be noted that above the market, the rising mauve medium moving average, currently at 589.75, and the March 2021 high of 588.04. Neither of these two will much use as supports on the market's way down. US dollar against the Mexican peso. Effectively a fourth consecutive indecisive spinning top pattern yesterday. Prices have been centered around this week the flatlining green short medium moving average, currently at 20.45.65, and capped by the September 2022 high at 20.57.65, and at the same time supported by the combination of the slowly rising mauve medium moving average, currently at 20.32.38, and the bright red lower trend line stroke uptrend, currently at 20.22.76, of the early November 2024 to date bull channel. And that bull channel is actually 20.22.76 to 21.03.66. This bright red shallow bull channel has been driving the pattern higher, very slowly higher, since last year. So far today, a higher open over the green short medium moving average, but the nascent move higher has soon been extinguished. We're dipping below the green short medium moving average once more.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.